We do our market update every seminar just to keep you guys up to date on how the Calgary real estate market is doing. We've been saying this pretty much every seminar for the last 6 months that, the numbers have been pretty consistent in the last part of this year. We see the total sales, they're down over 10%. That was expected because our prices went really high, really fast. Interest rates went up, and a lot of the buyers sat out on the sidelines. You can see that is resulting in more listings on the market right now. The active listings are up almost 40%. And then the average price, that's the one thing we're going to focus on a little bit in this seminar because that's what people want to know. Where's the average price going in 2025? You can see that it's up over 12%, over $600,000. That's an average price of an average home across Calgary. So it's all property types, all neighborhoods. We're at 609. If we look at places like Toronto and Vancouver, we're not even half where they are. So we've got a long way to go. We expect things to go further, but we're going to get into that further on in the seminar.
Yeah, and we're going to go into detail in which segments of the market are best to invest in 2025.
Yeah.
So you guys can see what's going on and why we believe in these segments.
Yeah, so the next slide is the year-to-date numbers. It being, 1/3 of the way through December already, we only have, 2/3 of a month to go to the end of the year. You can pretty much guarantee these numbers are going to be up or down just a little bit, but we're going to see these numbers at the end of 2024. Total sales, the change, we're only down 1.6%. That's almost flat compared to last year. And then the average price, just like the last slide, it's up 12.5%. Now that's a massive, massive increase year over year. Calgary's 75-year average, what we base a lot of our analysis on, is 3.5%. We're starting to up that mark because we want to get at least half of what it actually is when we do our analysis because we want to give worst case numbers. So we're using 6 sometimes, 5 sometimes, but to actually get 12.5, anybody who's owned properties for the whole year, they've made a 12.5% increase in their equity.
Yeah, and Danielle will be coming on talking a little bit about how easy it is to access that equity. So it's key as an investor that your properties are going up, you're buying in the correct areas, that you beat the city averages. Okay, so even though this is 12.5 here, there's pockets in the city that have gone up 18%, 19%. We love our seminar, Tim, the first seminar of the year when we come back from break in January. We actually run through community by community, go through those stats, and then show you guys which neighborhoods to actually invest in, which is very, very exciting to dig into those numbers that Tim gets together over the break here.
Yeah, so part of this market update is we're going to let you know what Remax thinks and also let you know what we think at Calgary Real Estate Wealth. So in 2025, Remax is actually predicting a 5% climb in average price from 2024. Now, an interesting aside to that is last year at this time, Remax released their prediction for 2024, and they thought the price gain would be flat over 2025 in Calgary. Royal LePage thought Calgary would go up 4%. Azad and I, if you probably go back and look at the market report from that December of last year, we thought the market would go up 6%, and it went up 12.5%. So, it doesn't matter how big these real estate companies are. They don't get it right all the time. We're on the ground in Calgary day after day after day. We see the market moving up and down and up and down. So we're fairly confident that we're going to see between 6 and 8 next year. Just because we're seeing 12.5 this year, we're not seeing that much of a decline in the buyers entering the market.
Yeah, Tim was looking at rental rates in Toronto and Vancouver. They're still well above $3,000. So people just to rent in those cities are going to look for cheaper alternatives and come here, which is going to help our landlords. The other big booster that we have is that all of the construction that's happening right now, 60% of that is purpose-built rental buildings. Okay, so or they call them, I was reading today, non-market properties. The city likes to use that word. Anyway, I was reading their program out at Franklin Station. They're building 400 units, and half of those have to be non-market, meaning rental purpose buildings. So when you see that happening, it means they're not building enough to accommodate what's going to happen. We feel that interest rates are going to go down. Well, we know interest rates are going to continue to go down. We know prices are going to come down just overall. We're already seeing it, Tim. I was talking to Tim about re-signing for cell phones. Cell phones are through the roof. I don't know about your cell phone bills, but I was at Rogers the other day and I couldn't believe what they were quoting me for a new phone. It was a lot, big, just on that, Tim, was a huge price savings going ahead with something like that. But where am I going with this? At the end of the day, we feel that there's not enough building going on. And what they are building, Tim and I were at Brookfield Homes on Saturday. What community we were in?
Ambleton.
Ambleton. You guys have got to Google Ambleton. Anyway, we sat a couple hours in a show home suite buying a $1 million property for our clients up there. And they were telling us starter homes, and Tim, you were going through that. This is interest starter homes, and we're talking basic. Tim, you said no landscaping, no fences.
No landscaping, no fences, no basement.
750,000. We're talking starter homes. So when you have a starter home being built for 750,000, in a cookie cutter, basically community, that means that anything closer in Ambleton's, it's on the other side of Stony Trail, so it's outside the city, basically, right? Outside the ring road, anyway.
And it's outside of 144th, which goes east to west, way north of the city, and that's where it is.
Yeah. So what we're saying is the prices to build these things are so up there that it's just going to force everything inside the city because there's not enough, right? Prices go up and down just because of inventory levels. And the people coming here, which we're going to talk about, it's going to continue to drive pricewards north. So we're very, very excited. We will probably be wrong. I'll bet we'll be wrong on our prediction, and it will be higher than what we're predicting. But if anybody works with us, we're conservative on our numbers. And if you are getting 6%, Tim, you're doing very good.
Yeah, you're way above, you're double the 75-year average.
Yeah. And just quickly, I just want to remind the new people that are on the call, 6% on an average of, we're buying rental properties, if it's a townhouse, roughly around the 430 to 460 range. At 3.5%, that's going up over a 25-year period of 400,000 to 3.5%, it's going up to $1 million in value. So you're going to be doing way better than that on your price points as well.
Yeah. So that's our real estate market update for this week.